how to buy or sell NASDAQ 100 stock index in 2016 like a pro, a part 1. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magdi.com. The title of this video is how to buy or sell NASDAQ 100 stock index in 2016 like a pro, a part 1. In February 2016, I will be recording the second part of this series of video, and also in August 2016, I will be recording the last part of this series of video. All right. Today is the 1st of February 2016, and the time in London is 34 minutes past 5 p.m. All right. And we are now on the daily chart of the NASDAQ 100 index. And you can see that the price is somewhere near the orange line here. What is this orange line here? All right, you see here we are on the daily chart. Pay attention to the orange line. I want to show you something very fast so you may understand, okay, the purpose of this video today, all right, how you can buy and sell the NASDAQ 100, okay, stock index in 2016, okay. So now I'm switching to the hourly chart. You can see that today, as you can see, today is the 1st of Monday, the 1st of February. And last week, you can see beginning of January, somewhere here. I can place a vertical line there, beginning of January right there. And I want you to pay attention to the orange line. You see here? So somewhere you can see on the 25th of January, the price hit that orange line, pulled back, all right, near the pink line here, all right, and then went back to the orange line again here. All right, at the beginning now you can see here also this particular day, which day is that? On the 6th, on the 14th of January, somewhere there you can see the price gap down near the orange line all the way to the pink line here. So this is just to show you quickly why it's so important to know what is this orange line, what is this pink line. That's where the professionals are making the decision. So in order to buy or sell, okay, the NASDAQ 100 stock index in 2016 like a pro, one must buy and sell, okay, around the key levels that the professionals are watching throughout 2016, okay? Very, very important. If I switch again to the lower time frame, hopefully on the 50-minute chart, you will see it again. What's happening here? The pink line, you can see on the 20th, the price dip below the pink line, went up, come back near the pink line, was retesting it. This is just to show you why it's so important to know where and when the professional day and swing traders are buying or selling, okay, the NASDAQ 100 stock index, okay? I'm going to switch my time frame now to the monthly chart very fast, and I'm going to give you exactly 6 key level, okay? The first key level is at 4739. I recommend to trader to take note for the NASDAQ 100. If you trade, you day trade or swing trade or invest in the NASDAQ 100 index, you need to pay attention and take a note. Note down all these key level, okay? The first key level is the high of 2015. It's at a 4739. 4739. The next key level is the low of 2015. It's at a 3787. 3787. The third key level that trader must watch for the NASDAQ 100 stock index is at a 4261. 4261. That's the media line of 2015. Now, I need to remind traders that I do not give to traders the exact media line. I always give to traders the nearest key level to the media line is 4261. The fourth key level that trader must remember is at 3592. 3592. That's the high of 2013. The fifth key level is at 2689, 2689. That's the low of 2013. And the last key level is at 3173, 3173. That's the median line of 2013. All right. So you can see here on my chart, I'm on the monthly chart now for the NASDAQ 100. You can see that the red line here, that's the high of 2015. The orange line is the median line of 2015. And the light green horizontal line is the low of 2000. Okay. The 15. The high of 2013 is somewhere near this level here, the dark green line. That's not the exact level, but it's somewhere near the dark green line here. The median line of 2013, I do not give the exact median line, is okay, somewhere at 3173. That's the line here. It makes sense, okay? And the low of 2013 is 26, okay? 89 is near this dark gray line here. Very, very important. As I show you already on the daily chart, also on the hourly chart and 15-minute chart, you can see how the price is bouncing from one key level. You see this is the median line of 2015. See how a day trader may make a right trading decision on or near those key level, looking for trading setup and then applying a top-down trading method, okay, to trade it, okay? Here it is. You see here, all right? It makes sense? Here the high of 2000, here is the high of 2015, the price is still here. So we are now on the edge of the median line of 2015. So do not forget the 6 key levels for the NASDAQ 100. Note it down, and whenever you are trading the NASDAQ 100 stocks or American stocks or any stock that is listed on the NASDAQ 100, the technology stocks, pay attention to these key levels. All right, very, very important. The next thing I need to mention to traders is that the market leaders for the NASDAQ 100 will influence the NASDAQ 100 index itself. So we have Google stock, Apple stock. These are the market leaders for the NASDAQ 100. When one is trading the NASDAQ 100 index, one must pay attention to Google stock and Apple stock, which are the market leaders for the NASDAQ 100 stock index. Okay? It makes sense? All right? Very, very important. Okay? They will influence the NASDAQ 100. Another thing I want to mention to traders that understand a little bit about Elliott wave theory. Recently, I was posting a video at 24 Elliott Wave YouTube channel, one of our YouTube channel, and I was sharing with traders. I think I was on the weekly chart, talking about, I think a 2 days chart. In fact, I was 2 days chart, and I was telling traders about an Elliott wave pattern here, a triangle that had been formed. Okay, you see here. So the price dropped down like this, and I draw this line on my chart. See, okay, A, B, C, D, E. So when we were here, we were waiting for the price to go up to this level and to find a resistance and to form, okay, this triangle here. So we were expecting the price to go, okay, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. The internal wave of the A, B, C, D, E chart pattern, and to find a resistance here, and to come back now. You can see my line is still here, all right? But as always, remember, the professional want to sell, they want to sell at the best place. So there was this key level here, okay? This you see this resistance here. So we were here that time. So all they were placed at this high here. So quickly, you can see that the price ran to that level here. Okay, it gap up, in fact, the price gap up here. If I go to the daily chart, hopefully you see the gap there. Here, you see, price gap up to this key level where orders has been placed, and they sold it here, okay? What I want to tell those who understand the Elliott wave theory is that this triangle here has been changed a bit because we have something else, but the triangle is still in place. Look carefully, but there's a bit of change, okay? So we were talking about 1, 2, okay? A, B, okay? Pay attention, okay? That's now our C. So A, B, C, a bit of a mess happened. And now we see now. So A, B, C, D, E, all right? A, B, C, D, E. The E has been subdivided into 3. So you see from here all the way up here, this is the E wave, okay? A, B, C, D, E, all right? So this is our new triangle here, okay? This is our new triangle. So if I adjust it now, you'll see that this is our triangle, a bit of mess here. Our original triangle, we were expecting the price to find a resistance here. You can see that the price gap up here form what we call an island pattern, okay? Island pattern. You see, this section here is island chart pattern. There's a gap here, and there is also a gap here. It's a very bearish chart pattern here, and the market has sold it now. So after the A, B, C, D, E, all right? Hold on, please. I want you to understand this, okay? If you want to know more about A, B, C, D, E chart pattern, go to www.24elliottwaves.com, all right? So we have here now our E pattern. In fact, I'll remove the subwaves so you can see it clearly on your chart, all right? That's it, okay? That's it, okay, right now. It makes sense? A, B, C, D, E, all right? Now the price, the triangle has changed, so we have now, okay, another corrective wave that is coming down. Price come down 1, okay, 1, 2, all right, it makes sense. Where are we? 3, that's it here. 4 and 5. So the price went up all the way to the red line. Now it pulled back to the edge of, okay, the pink line here. So you see why it's so important to know the key level where the professional are likely to make a trading decision. Okay, so as the price was coming down, we see the first, this corrective wave is 1, 2, 3, 4, 5. Okay, price form a triangle up and come back down 1, 2, 3, 4, 5. These are corrective waves. This is a corrective wave. This is another correction taking place down here in 5 waves down. Okay, to retest the pink line. Traders must look for opportunity to buy at this point in time, okay? That's where we are. But now you can see the price finding the resistance near the median line of 2015. It makes sense? All right? Just to clarify that very fast. The current market pattern is a consolidation. Now, it's a balanced market. It's a corrective market. So the market is not trending anymore. Remember, the title of this video is how to buy and sell the NASDAQ 100 stock index in 2016 like a pro, part 1. So in order to buy, we must check first, okay, the current market pattern. Which market do we have today, okay? Looking at it, the NASDAQ 100, the medium-term market pattern is a corrective market pattern, is a consolidation market pattern, is a balanced market pattern because the price is not trending anymore. This is about the medium-term market pattern. So the market pattern will determine the trading or the investment strategy that we must adopt at this point in time. Now, I would need to say this again. The market pattern will determine the appropriate trading or investment strategy that we must adopt to buy or sell the NASDAQ 100 stock index in 2016. Right now, the market pattern that we have is a corrective market pattern, so we must adopt appropriate trading or investment strategy at this point in time. So talking to an investor at this point in time, we will say to an investor that is trading the NASDAQ 100 or investing in the NASDAQ 100 stocks that there was a trend in place since 2009. How do we know? Because the market pattern was a rising channel. You see the dark green rising channel. Am I talking to myself? Let me highlight the width of that channel. See, this is the channel I'm talking about, okay? Between this green, dark green, and this dark green line, trend lines. So the long-term trend, the long-term market pattern is what? A rising channel. In fact, the trend was quite strong and went above, okay? The green channel, okay? See our green channel, green channel, green channel, green channel. But finally, the price went above it. We will project that green channel to the other side, okay? It makes sense? All right? We project it to the other side, okay? So the long-term market pattern, talking to an investor, was a bullish trend. So one can buy and hold during that time, okay? But as I'm speaking to you today, in 2016, in January, in fact, today is the 1st of February 2016, the current market pattern or the medium-term market pattern is not a trending market pattern, is a consolidation market pattern, is a corrective market pattern, is a balanced market pattern. So to an investor that was buying stocks on the NASDAQ 100 or was buying the NASDAQ 100 stock index itself, it is time to secure gain, it is time to take profit, or it is time to be defensive. Because the market pattern has changed, okay? The long-term market pattern has changed to a balanced market, has changed to a corrective market pattern. Our previous strategy is no more valid at this point in time. We must change the trading strategy with a balanced market trading or investment strategy. This is about how to buy or sell the NASDAQ 100 stock index in 2016. All right? So we have a consolidation, we have a correction that is taking place here. The market is pausing, is slowing down. The trend is no more, okay, strong as it was before, is slowing down, okay? If an investor wants to buy or hold again, the investor must wait until the price goes above, okay, the high of 2015, 4739, goes above it, don't buy it away. Wait for it to validate the level of 4739 as a support level, as a valid support level, before one can buy and hold. One of the mistakes that the investor and fundamental traders are making is that they will look at the fundamental will be solid, but at this point in time, the fundamental may peak. Yeah, if the fundamental, okay, have peak, one should not assume that the market is still bullish. All right, fundamental will peak at a reversal point. Okay, it's very, very important. Okay, because fundamental trader will still look at the balance sheet. The balance sheet is still strong, but the fundamental or the asset may be overbought. Therefore, this is not the best time to buy and hold. One should buy at a reasonable price and allow the price to go up in the long term. Okay, it makes sense. So the long-term market pattern is bullish, but the medium-term market is a consolidation. Therefore, day traders, swing traders, okay, must adopt a corrective wave market trading strategies. Okay, it makes sense. So the price right now is oscillating between the high of 2015 and the median line of 2015. We see a consolidation. Okay, let's go to the daily chart. You'll see now on the daily chart. Pay attention to the orange line and the red line here. We see it went up all the way to the red line, pulled back near the orange line, even went below it. But here it is again. It went back again to the red line. Now we are again near the orange line. So the current market pattern for the NASDAQ 100 is a consolidation. It's a corrective market between the 4739 and 4261. Professional will look for opportunity to buy on or near the median line and look for opportunity to sell on or near the high. Anytime we see a market pattern we can divide it into two, talking about the red line and the orange line. We pay attention to the media line of that channel. I would say somewhere near the level of 4500. 4500 is another key level, which is almost equal to the media line between the red line and the medium, okay, and the median line of 2015, 4505. Okay, it makes sense? Current market pattern, that's what we see. Okay, if the price dip below the level of 4262, we will project that channel, the top channel between the red and the orange to the downside. We have now a new channel which is between the orange line and the low. So if you switch side from the high and the median line to the median line and the low, we will now draw another median line once again between the median line and the low of 2015. It makes sense? Somewhere there, roughly in the zone of in the zone of 40. That's not exact level, but just take it like in the zone of 4023. Okay, 4023, somewhere here. Okay, we have another level that we must watch, which is the median line between the 4261 and the 3787. It makes sense? It is also powerful. So these are the hot spot trading zones. So a day trader, a swing trader, I'll move my line, okay? A day trader or a swing trader, let me just correct that quickly. A day trader or a swing trader is looking for a high probability trading setup on or near, okay? Those are key levels. When we recognize a high probability trading setup, somewhere here, or the median line of the smaller channel, or here, all right? We will use a top-down trading method, but the market pattern will determine the appropriate trading strategy. Right now, the price is, traders are selling at the top here and taking profit near the median line. If the price find a resistance, as you can see now, is stuck near the median line. If you find a resistance, this is a, so at the end of this market today, daily chart, if it's still at this, tomorrow, we'll use a top-down trading method to trade it. It can go up or down. If it's going down, it's going near, okay, the median line of, okay, this a new channel here, okay? It makes sense? So long-term market pattern, bullish, all right? For an investor, it's time to pause, it's time to secure gain, it's time to wait because the trend is slowing down. For a trader, it's about using consolidation, okay, corrective wave, trading strategy at this point in time, okay, on or near, okay, the key levels. It makes sense? If the price, okay, dip below the low of 2015, we must now pay attention to, okay, we must now pay attention to the high of 2013, the median line of 2013, and the low of 2013. If you go to the weekly chart, one can see that if you look at MACD, all right, on the weekly chart, there was a trend that was in place before because there was a deviation between MACD, all right, and the central line, a separation that is showing that the trend is quite strong. Now we see a conversion that was taking place here. MACD was converging towards the central line. It's alerting that a consolidation or a corrective market is in place. Here we have a triangle, okay, A, B, C, D, E. That triangle is completed. The price come back down. It's in fact this move here is a kind of distortion, but it's not a market manipulation because the small money just want to buy at the best, I want to sell at the best place, which is the high of 2015 right here. Okay, they just want to sell here. It's not a market manipulation, but it is a distortion because normally traders should sell somewhere here. Okay, when we were expecting the A, B, C, D, E, okay, corrective triangle to be completed. But now we have a new triangle that's in place, and we have, this is a corrective move up, which is a triangle, followed by another 1, 2, 3, 4, 5 wave, overlapping wave. This is another corrective wave down. So the current market pattern, or the medium-term market pattern, is a corrective market pattern. So the price may be oscillating between, okay, the orange line, or even we can say between the level of 4,023, okay, and the high of 2015. All right, it makes sense. It is also powerful. Okay, so the market will become very, very bearish. Okay, if the price, okay, finally find a resistance below the low of 2015. So priority to bearish signal below the low of 2015, priority to bullish signal above the high of 2015. But if one can buy also near the low of 2015, expecting the price to go up near the median line and to continue all the way to the high of 2015. One can also sell, because we have a balanced market, we can sell and buy. Buying near the low of the consolidation, selling near the high of the consolidation. Sometimes, some trader will buy near the low, and they will also look for opportunity to buy near the median line. If the price breaks above the median line and validates the median line as a support level, they will buy again, expecting the price to continue up to the upper side of the consolidation. This is the current trading strategy that we can adopt at this point in time. Okay, it's a balanced market pattern. If traders sold it here, they will expect it to come. They will take their profit somewhere near the median line again. And if the median line is converted into resistance, they will sell again and expect the price to come near the low. But for a bearish season to be in place, the price must be below the low of 2015. And for a bullish market to be in place, the price must find a support above the high of 2015. This is about, okay, how to buy or sell NASDAQ 100 stock index in 2016, like a part 1. In February 2000, somewhere around 15, okay, to the 20th of February 2016, I will be recording the second part of this video. And in August up to September 2016, I will be recording, okay, the third part of this video. I'll be talking about the equilibrium price level and other key levels that traders must watch throughout 2016 if they are trading the NASDAQ 100 stock index. This is the end of this first video, all right? The 6 key levels that traders must not forget are 4739, 3787, 4261, 3592, 2689, 3173. For an investor, looking at the current market pattern, one cannot buy and hold. One must secure gain and become a bit defensive at this point in time. If one wants to buy and hold, one must wait until the price finds support above, okay, the high of 2015. All right? On the other hand, for traders, day traders and swing traders, looking at the current market pattern, which is a corrective market, one must look for opportunity to buy and sell, buy near the low of the corrective pattern and selling near the high of the corrective pattern. If the price out of the horizontal channel, we will project the channel to the upside. If the price is out of the rising channel, we will project also the channel, okay, in the direction of the price. So if I want to clarify that quickly, you can see that the green channel that was in place, you can see that the price, okay, this channel, the price went above it, we have to project that channel to the upside, okay? Okay, we project the channel, draw a line that is parallel to the first channel. So this is the median line of our projected channel. See here? Projected channel to the upside because the price went above the green channel, okay? So we project it to the upside, and this blue line here is the median line of our new channel. Now the price is still inside, okay, our original channel, all right? We need to watch it carefully here because there are few scenarios that can happen here. All right, but I will not talk about it now. I will talk about it in the next video because I don't want the video to be too long. Okay. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about how to buy or sell NASDAQ 100 stock index in 2016 like a pro, a part 1. Speak to you soon.